This is ULTY, the Ultra Option Income Strategy ETF by yieldmax, which is one of the most popular ETFs in the high yielding dividend income space. Now today I'm going to be showing you my personal experience investing in ULTY over the past 2 months, and I've put about $3,000 into this position. I'll cover why I bought it, how it's performed so far, and whether I'm planning to add more shares to my portfolio. So as most of you know by now, ULTY is yieldmax's Ultra Option Strategy Income ETF. It's an actively managed ETF seeking to generate now weekly income from a portfolio of covered call strategies, each on a US listed security. And if we take a look at ULTY's holdings, we can see they actually hold the underlying shares now of their stocks, such as Robinhood stock, Upstart, Tesla, Reddit, NQ, Palantir, and so on. So a lot of good companies, a lot of high volatility companies that they're personally picking, and there's no set strategy with this ETF, which means that it's going to do what's best for the fund. And this can also include selling covered calls when the timing is right, when the premiums are high, as well as buying protective puts to prevent downside protection. This ETF used to have HIM stock, but it tanked a ton, but the ETF did not tank as well because of those protective puts, and now it's removed from its portfolio. So this ETF has between 20 and 30 securities, and it's constantly changing to keep its price point pretty favorably over the past few months, and it still contributes to a high dividend yield now weekly of about 8 to 9 to 10 cents per share every single week, and it's been doing that consistently since March 13, 2025. So I currently own about 500 shares. Cost average is about $6.12, and the market value is about $3,150. Now, I do not have dividend reinvestment enabled. I'm personally manually dripping back into the fund as well as dripping back into other assets as well. But the main goal is to use it as an income ETF, as the name implies. It's to generate cash flow for reinvestment or just earning extra income. And at the time of purchase, yields were incredible, over 70% annualized, and it still is over 70% annualized. And it's going to be distributed every single week, which is one of the main draws towards this ETF. It pays out weekly compared to most yieldmax's ETFs, which pay out on a monthly basis. I also really enjoy the strategy adjustments to stabilize the NAV. Now, as you can see in the past month, it's been very stable. Every time it paid out its dividend, it's recovered right back the next week. And that's been one of the main draws towards the ETF. It's been reliable, it's been consistent, and it's been paying you very high dividend yields. I also like the idea of diversifying away from traditional single stock ETFs. You're getting that diversification. As we mentioned, it holds 20 to 30 of the actual securities versus a single stock ETF where you have that one single stock risk. So if you are investing in TSLY, if Tesla does end up tanking, if it does poorly, you're going to have all that risk and downside that you'll have to deal with because it's all based on that one stock. Let's go over my position. As we mentioned, I have 500 shares, which is about 5% of my portfolio diversity. Now, I know a lot of people are putting in tons and tons of money into this ETF, as well as putting their entire portfolio into this ETF. Now, that could be good if you are open to having that high risk, high reward. It's never good to put all your eggs in one basket, especially with some of these newer income ETF products. But with how popular it's been, it's no wonder people are taking out loans even and putting it into ULTY. And another strategy I've been utilizing is actually selling cash geared puts to try to get ULTY at a lower cost basis. As we can see, I have a $6 cash geared put for July 18, as well as some cash geared puts at the $7 strike for August 15. And that is because I want to get assigned on these puts right here, and I've collected a ton in premium for doing so. This shorter dated put option, I do want to get assigned if possible, but I'm not sure if ULTY will drop below $6 per share by next month. Now let's get into some of the juicy stuff that we've all been waiting for, and that's the dividends. we can see I've been receiving dividends since May 30th, and it started out pretty small, $28 for that week, and then $28, $33, $35, $46, and this upcoming payment Monday is going to be $47. So we can see really how our account is snowballing even with dividend reinvestment turned off. I'm slowly adding more and more shares every single week and month, but I'm not putting all those dividends back into the fund. And if I did, I would have even higher dividends than I am right now. And if we take all of these dividend payments and we add them up, we're going to be getting just over $200 just in a little under 2 months. And that's not considering we also have that capital appreciation from this ETF as well. If we take a look at the stock, we are also up about $87. So in total, it's about a $300 return, including the share price appreciation, which is roughly about a 10% return in less than 2 months. An absolutely amazing return. Not only are we getting that share price appreciation, not too concerned about it rising in value. I just want to see it stabilize as it has been the past 2-3 months ever since the weekly change. And this ETF has gone from one of the worst ETFs, it's been notorious, to one of the best ETFs on the market right now, as we can see from March all the way to now. And that is because of their strategy change. They are no longer limited to synthetic covered calls. They hold the underlying shares. They sell covered calls when the timing is right. And they're also buying protective puts as insurance in case of any big drops. We're not getting our entire position dumped. So for the past few months, I've been very happy with the risk profile. The yield is still one of the highest in any ETF, over 70% annualized. The weekly payouts fit my strategy of generating frequent cash flow, and then every single week I utilize that cash flow, those dividends, to buy more shares of ULTY or more shares of another position. Another one I'm a huge fan of is MSTY, as well as funneling some of those dividends into SPYI and QQQI for a more stable position. And while ULT is great and amazing, it's also a very high risk options-based ETF, not necessarily a core holding. So if volatility dries up or the underlying stocks move sharply, distributions can end up dropping. So we do have to watch this ETF very closely, the option premiums, the implied volatility, as well as the NAV trends and any changes to the fund strategy. Because we have to also keep in mind it's an actively managed ETF. The fund managers could end up screwing up this ETF again in the future. But so far, they've been doing a good job. It seems like they've been learning from their mistakes and they know what investors want. So what is my next plan for this ETF? Right now, I'm just going to continue holding my shares, my current position of this ETF. And I'm actually planning, as I mentioned earlier, with cash secured puts, adding more shares to my portfolio, getting my share count to 1,000 shares threshold, and we'll see from there, possibly even scaling even further depending on what happens in the market. And I'm also pairing ULTY with broader ETFs to balance the risk. And we do have an upcoming video coming out in a few days that will go over the 2 best ETFs to pair with ULTY for a very balanced and conservative growth income portfolio. So make sure you stay subscribed and tune in to don't miss that video. It's a very good one. And a lot of people have been requesting that video. What are the best ETFs to pair with ULTY for a balanced portfolio? But so far, ULTY has performed pretty much as advertised so far. High yield with some volatility, and income-focused investors have to understand the risks. And if they do, it's a very interesting tool that can help accelerate your portfolio and has a variety of use cases.